What's good, YouTube? It's your boy Dylan the Trade here, and today we are going to do a breakdown of my trades from last week. So we are at the beginning of a new trading week, but it's good to review what happened the previous week to understand where you went wrong, where you went right, what you could have done better. What is it that you didn't notice due to the fact that you're involved in the market. And what you're able to notice now. So, um, for last week, majority of my trades came from majority of my trades came from gold, with some trades being from UJ. But if I'm being honest, last week was a very testing week for me in terms of psychology. Just being very honest, like my psychology wasn't the best last week. Um, I was entering trades for the wrong reason and exiting as well for the wrong reason. If I enter a trade, I don't hold out my trades. I end up exiting too early, which would cause me to miss out on amazing opportunities, you know. So I had to deal with a lot last week. Um, but coming to around the middle of the week, you know, you begin to realize what it is that you are doing wrong in the market, and how you could begin adjusting. It all comes down to awareness, you know, not just awareness on the charts in terms of what you see the charts doing, the way the charts moving. No, awareness of your mindset, you know, your psychology while being on the charts. That is what ended up happening for me last week. I had to go through that pain of missing out on amazing opportunities in order for me to learn a valuable lesson and truly progress with that lesson. So, let's going down to the smaller time frame. So as you can see, um, the week, let's put this here. So this vertical line is where the week started. So as you can see from the start of the week, price was pretty much stuck in this range here, but then we eventually broke out of that range and came back to this high, this previous high, um, which was once used as resistance. You know, price ended up finding support at this point and then pushed higher within this exhaustion zone that we see here. And now we see price finding resistance at this point. Price is testing this resistance and we are pulling back. So going on to smaller time frames on gold, let's go to the beginning of the week. The first trade that was taken here, now I can't say specifically like how my trades went exactly, like my thought process during the trades, only like for specific trades that really, you know, influence my mindset. I could actually truly speak on. But this trade, you know, uh, I didn't see, looking at it now, there wasn't any reason for me being in a trade like this because, yes, although, we had this pullback here, my mindset, I was under the assumption of, you know, price break underneath this, we came back up, and once we came back up, we began to see price pulling back. So if I was to break down to a smaller time frame, we would be able to see like a small little, price kind of pushing down just a little bit. But as I said, looking at it now, there wasn't any reason for me to be taking a sell here. Why? Because this was just a 30-minute. This is what happens when you pay attention to the smaller time frames too much and not look at the higher time frames. If we go to the forward time frame, give me 1 second. Yeah. If we go to the forward time frame, we could see that price created a bullish candle. We created a testing candle which created the resistance, but overall we still are bullish. So unless we got a proper confirmation that price wanted to pull back, you know, we didn't have any sort of exact confirmation of price pulling back down. You know, this kind of closed with a lot of momentum, and then we had this bearish candle, which let me see, did not have any wick whatsoever. And when you see something like that, that usually means like price. You see price here, price pretty much going like this, and then here you kind of go like that. So this will be like those first two candles, or we could even select here. That'll be the first candle, that'll be the second candle, and then the third candle pretty much closed without any wick. So it's just straight bullish. And then the second candle, the bearish candle, is pretty much like this because it was just straight bearish momentum. So it was just literally a pullback. So now we ended up finding support, which is what we see here, and price continued to push higher, breaking above, which is what we see happen right here. Break above here, and then we had that pullback at this point. Price started to push up just a little bit, which we see happening right here, and then we, came right back down. So just like this. So understanding like the candlesticks and this concept right here, based off of just reading the 4-hour candlestick itself, you could see that this area here, which would have been right here, was just simply a pullback in the overall bullish momentum that was happening within these candles. If I truly wanted to get a proper entry, it would have to be in somewhere within these two candlesticks right there. So going back down to the 30-minute and heading over to that trade. So yeah, this was a very bad trade to take. You know, um, there wasn't any sort of confluence, any sort of proper analysis, and then this trade was also taken at 12:30, which is outside the realm of the Asian session, and it's before London session, which means that is like a dead time for the markets. So I shouldn't have even been trading or taking trades during that time. You know, my mindset was more so of trying to make a profit instead of trying to get the best possible setup, based off of the knowledge and the practices and the understanding that I have. So we can move this. So as I said, that was the pullback, which is literally the bearish candle. And then we had the bullish candle here and price. So you can actually see it here. Like this literally shows the diagram that I just drew out. We had price come up, then we had the small pullback. So these two was like the first two candles. Then we had the pullback. Then we had price come up, you know, yeah, pullback, push up, so this is like the last bullish candle. Then we had the bearish candle right inside like this region. And then once we had that bearish candle, we created the next bullish candle at that point to take price higher. So it was literally just a pullback. Price came up. In this instance, came up, you know, um, found resistance and came back down. Now, I ended up taking a bullish trade at this point. Let's go into a smaller time frame. Yeah, so I ended up getting into a bullish trade at this point, which, if I'm being honest, I could have actually gotten maybe like a 1-to-1 out of that trade if I placed my stop maybe just about here. So yeah, just a 1.3 percent, but that wasn't the case. Why? I pretty much entered this trade based off of, as I said, trying to make a quick dollar. Majority of the trades, they weren't entered with proper analysis. They were just entered with the sake of, okay, I see this happening, cool. I'm gonna make a quick, I'm going to make some profits from it. I'll try to make some profits from it instead of truly seeing what the chart is doing, being patient, waiting for the way it's set up, and taking my trades based off of that. So, you know, we had price come back down. We broke above this area of, small resistance. And then once we broke above it with a bullish engulfing candle, I'm thinking, okay, we already bullish. So more than likely, we're going to see price continue to go bullish, possibly up into this region, or maybe up to the high. So, I took that trade based off of that knowledge. And in my head, I'm like, does it really make sense taking this trade? Like, am I taking this trade for the sake of making a profit, or am I taking this trade like with proper analysis? So I ended up getting out in profit like very early, which look at the risk to reward. That's horrible. That's just a 0.44, not even a 1-to-1. So it didn't make sense. That was literally that trade. And as I said, based off of what we saw from the 4 hour time frame, price found resistance. So if we was to take it down to the 5 minute time frame, which I think price happened here, is at this point we could actually say, all right, um, we could see price beginning to move lower at this point here. We could say that there is an area of support that was found here. Price pushed higher, but look at this. We have that high, but then we created a lower high. So you're already seeing the momentum shift. And then on the 4 hour time frame, we have that exhaustion wick from the bullish candle, which shows that buyers are becoming exhausted out, and we're seeing a lot more sellers stepping into the market. So from the time we see price below this point, we knew, okay, we have not only you know we have one, two, three bearish candles pretty much breaking out of that resistance zone to confirm that this area, sorry, not resistance, support, to confirm that the support area is broken. Price ended up pulling back, and if you go down to a 1 minute time frame, so let's do that. Go down to a 1 minute time frame. Let's load up. Let's load up. Let's load up. You're able to find a much better entry based off of that pullback. You can either enter right here, where you see we have exhaustion here in this bullish candle. Price came down, we have that engulfing candle, and then although we have this wick, price failed to come back to you know the high of this candle or the open, and then look at this. We created this, definitely give you that confirmation that price is going to sell, because this is a shooting star, which is a bearish candlestick pattern. And if you understand your candlestick analysis, it's a bearish candlestick pattern that indicates bearish momentum stepping in. You could either see it as a bearish reversal pattern or bearish candlestick pattern, showing that we're going to see momentum stepping into the picture. So trade could have been taken literally right at this point. Not only that, we are under the MA as well. So all of these are signs that price is going to be moving lower. And then if we have two, based off of the 5 minute, let's do based off of the 5 minute in actuality. Yeah. So you can see here, based off of the 5 minute, price here comes down. So 38.2%. So we already bearish. We already broke below this. Price came back to a 38.2%, which is means that at that PRZ level, you expect an aggressive impulse movement from this level. You expect more bearish momentum to continue. So we could push this down here, or we could say, all right, we're gonna take it to the last area of um, the last area of resistance support. Let's go down to a 30-minute time frame, which yeah would have been pretty much like around that area there. You ended up continuing lower. So if you was to held it out, you could have been carried back down to this exhaustion zone. You know, a solid trade literally within that area, and that's only if you know I was actually analyzing price properly. Let's go to the next trade. Now this was the trade that really made me had to shift my mindset in terms of holding on my trades. As you can see here, this was a trade, I analyzed everything precisely. We had price creating a counter trend, as you can see. We had a point of resistance that was formed. Price created counter trend. We had a break of that counter trend, a pull back, and if you go down to a 5 minute time frame, we can see what happened within that pullback. So as you can see, you know, looking at more details within this region, we could see that this was the area that price was finding resistance at. We created a lower high to this high. We broke the trend line. So we broke the trend line with momentum. We waited until we got that pullback. So if we was to take the fib out from here to here, we waited until we got that pullback. Now I needed extra confirmation because I was looking for a bullish engulfing candle, a bearish engulfing candle right here in order for me to take my entry. But I was saying that if I was to take an entry after price breaks below this, the risk would have been too much. So I actually scaled down to a smaller time frame, which was a 1 minute time frame, and I found an entry on that 1 minute time frame. Let's go down, for the sake of this video and understanding like my mindset in everything with regards to this trade. Okay, so this trade was literally taken right here, right at this candle. So once price broke below here, that was my opportunity to get in because we already, you know, made our retracement. Price came down. I did have one entry at this point, but then I exited because um, I got in too early. So I waited, and then once we had this candle, that is when I ended up taking my entry. And as you can see, we went in profit for a little bit. I actually held it out. I think I held it out to about like somewhere around this region here. I took some profit, but then price ended up beginning a pullback, and I not really because I had a point 0.5 on goal, and based off of the challenge that I'm doing, I didn't want to risk a lot. But if you look at the risk, it's only 30 pips, which means that the most I would have been losing on this trade is $150, which would have been just about point, like 1.5% on the account because it's a 10K challenge that I'm doing. So, once I saw price pull back, I didn't want to lose the profit I already had. I made back up the loss. I wanted to just keep the profit. So I think, okay, maybe price reversing. But I didn't understand what it is price was showing me. We already had everything planned out here. We found such an amazing entry within this entire region. And my take profit was literally here, which means my take profit would have gotten smashed easily. Solid 1 to 2 risk to reward. But because of my mindset and not allowing the market to breathe and not willing to risk or lose, risk the account or accept the risk that I had placed on the trade, I ended up getting out prematurely. And look what ended up happening. Not only did price would have hit my take profit, but if I held it out, I could have found, multiple opportunities to get into the market, as well as hold out the trade. Not saying that I would have held it out this long, but based off of, you know, um, the way that I trade, if I was to maintain this, we place fib from the high to the next low. Price only came back up to a 38.2. Price never break a 38.2, which means that I could have continued to hold this out right down until the next negative 27%. From there, we take this to that 38.2% region and we measure the next pullback. Let's say here, let's say I didn't want to risk the 50%, you know, of this overall push down. Could I end up continuing it? As a matter of fact, we didn't even have to do the 30.2. We could stay here from where we took the trade, 38.2, but it's continue to push down. from here, we see price only came back up to a 23.6 here, continue to hold it here, continue 23.6, continue to hold it, and that is how we could have ended up um, holding up my trades for a longer period of time. And look at the amount that this trade ended up running out for: 300, pretty much 400 pips on gold within this entire area. And I got in pretty much at the top of the move. But because my psychology just wasn't there, I wasn't able to capitalize on it. So I have made it my mission that whenever I am taking a trade, whether it is a trade that I didn't do a proper analysis on, or a trade that I did, you know, as much of my analysis as possible. I try to understand as much as I can to what the market is doing. Whenever I'm taking a trade, I am holding up my trade, and I am only exiting that trade under these conditions. My stop loss gets hit, my take profits get hit, I got knocked out for break even, or I am up 2 or more times my risk, and I see a valid reasoning for exiting my trade, whether that means I am satisfied with the profits that I have, or price is pulling back too much and I'm losing too much of my profits to actually, that I am comfortable losing, and I just exiting out of the trade because I don't want to lose too much of my profits. So that's pretty much what happened in that trade. Now this trade, this was the first trade that I took after telling myself I'm going to hold out my trades for a lot longer period of time. What pretty much happened in this area is, as you can see on the 4-hour time frame, we are within this region. You can see we had like a bunch of consolidation happening here, which means that this area is being respected by a price. This area of previous resistance, now support, is being respected by price. So let's go down to a 30-minute time frame. So what I noticed was, we created like the lower low within this push down, but then we had like a small higher low happening here. Then we had another one happening here based off of what um I was looking at on the smaller time frame. Now, what I noticed was that, I'm thinking, okay, we potentially broke above this high, which means that we've broken above resistance. Price came back here, we had multiple exhaustion, which suggests that sellers are um, sellers are not strong enough, and we're having a lot more buyers coming into the market, which is not a bad analysis, based off of what I'm seeing. But the problem is I was trying to force something within this chart on the smaller time frame that wasn't something to be noticeable at all. Like, it's okay to notice that we have the exhaustion wicks happening here. you know Pretty much all of this is doji, so that's consolidation on a smaller time frame. It's good to notice this stuff, but there wasn't any sort of confluence to say take a buy within this region. Where was the confluence? I was trying to create that confluence by saying that this is an area of support, so we could see price push higher. But in actuality, the confluence was within this region, right inside here. this point of this area where price found support, and based off of the higher time frame, look at where price wanted to come back to, that area of support. So if I was patient and understand, my time frame my time frame correlation properly, is at that point I could have understand. Okay, let's be patient. Let's wait and see what price wants to do. Once we got saw, price come back down into that resistance point, and it began to create this bullish candle. We had that close of the bullish candle. Is at that point we could scale down to like a smaller time frame. Yeah, that point we could scale down to a smaller time frame. We noticed the resistance that was being done here on the 5 minute time frame. Price broke above the resistance, so this is a confirmation that price broke above it. And then we had, look at all of these exhaustion wicks. Then we had a hammer candle that was formed, which means that this right here could have literally been the entry. 40 pips, we put it underneath the wick itself, but you still will be able to make a 1 to 2 risk to reward. And if you held it out right throughout until news hit, we could have rode the wave up and collected another 300 to 400 pips off of that trade. So, although I took a loss on this trade, I was very happy with holding up the trade, even though it was a loss, because I was able to learn. And at least in that instance, if the trade ended up going my way, I could have ended up getting a nice profit out of it if it ended up playing out. Um, so that's just how I'm looking at it. Like, I see it as a lesson. I see it as progress in the sense that I actually stuck to what I told myself that I am going to do, which is hold up my trades. And, you know, I am okay with actually taking the loss. And that is what you have to do when it comes to this market. Like, you're gonna take losses regardless. Losses are inevitable. You cannot stop them. You know, you have to become okay with taking your losses, learning from them, and then capitalizing on the opportunity when it arises based off of the lessons you've learned from your losses. Because the same setup is going to show itself again. What determines whether that setup's become a profitable setup or a non-profitable setup is whether you actually learned your lesson from the previous loss that you had. You know, like, as I think I don't remember who said it before, but the difference between like trading and school is that school, you are taught before you are tested. So you are taught, you learn, and then you get tested. In trading, you trade in the live market, which is your test. You take a loss, which is your lesson. And then based off of the lesson from that loss, you learn and you understand. That's the difference. So you literally have to take your losses in order for you to learn and progress. But moving on to the next trade. Now, this wasn't an actual trade that I took. Um, this was just me testing out something, but it would have ended up playing out. But this was the next trade that I took. This one was just more based off of me being impatient. Why we came up into an area of resistance, and it was based off the 4 hour time frame. But this is the 4 hour resistance. We had um, multiple times price tapped into this area here, and then I drew like a little trend line that I saw was farming. But once I saw this huge exhaustion wick, in my head I'm like, okay, this means that we could see price kind of coming down. So I ended up scaling down to the 5 minute time frame, and I got in at this candle. The problem is I didn't wait until the candle closed, which is a very rookie mistake. You always want to wait until your candle close. Even if the candle decides to, continue to push all the way down here and then close out, then you just miss your opportunity. That's all. You wait and then you see if there's not the potential for another trading opportunity to arise. And once you see it, then you take it. But it is better to wait for the candlestick to close and miss an opportunity than for you to jump in prematurely, and then when the candlestick does close, it closes like this with a lot of bearish uh sellers exhaustion, and then price opens back up and creates a bullish engulfing candle and stop you out before the move even starts, and then the move ended up happening out. So that's what happened in that trade. Took a small loss at the end of the week. No biggie. So yeah, that's pretty much what happened in gold. This was majority of the trades that was taken last week for me personally. There was one more trade that I took, and that was on GJ. Let me pull up that trade, which was this long position that I took here. What allowed me to take this position was that, we are already bullish at this point here. No, this is just the thought process I had at the time. So that it was already bullish on the higher time frame. Like if you go to the 4 hour time frame, and then I saw price tap back into this area here where it found exhaustion. Um, Let me see. Did I take it on the 1 hour? Yeah, I think I took the exhaustion here from the 1 hour time frame. So once price came back into this area, um, you could see the wicks that happening at the bottom, but we never broke above this area of resistance. So I needed more confirmation. So scale down to, if I'm not mistaken, I think it was the 15-minute time frame. Yeah, so I think it was a 15-minute time frame. Once we had price break above this here, if I'm not mistaken, price came down and then it pushed up. But as you can see, we had like these smaller candles that was farming. So we never truly like created like a break above this, like a bullish variation pattern until we had this candle. So if you got into like a 5 minute time frame, yeah, if you got into the 5 minute time frame, you know, I needed to have more information. So I waited until this candle was formed, which broke above this candle and closed above it. That is pretty much where I ended up taking my entry. And I had to hold up my trade for quite a while. I was in drawdown for quite a while. And there was so many times that I kind of wanted to actually exit out the trade. But as you can see, support maintained. We never broke below support. So that also gave me hope that price was going to continue to push higher, in which it ended up doing just that. And I had my take profit a little bit higher, but I had this zone drawn out here, which price ended up tapping into perfectly. And once it tapped into it, consolidated for a bit, it did push higher to a point in time back into that zone, and then it just ended up breaking down from that point in time. So that was basically this trade. But overall, from this video and this breakdown, you know, based off of last week, there was a lot of lessons that I needed to learn. There was a lot of things that I needed to understand about myself and things that I needed to change. You know, over the weekend, I did some very serious back testing, very serious studying, you know, try to focus on things that I didn't focus on as much at the start of my trading journey that would have been very essential to me now, at this more advanced stage in my trading journey, you know, could have actually capitalized off of the information if I had learned it back then, uh, truly paid attention to it back then. So that's basically it for this video. Hopefully, you know, anyone that's watching, thank you so much for, you know, watching and staying through the entire video and staying through the entire breakdown for these past three videos. I really appreciate it. You know, I really do want to thank you, and I'm extremely grateful for just the opportunity to be able to showcase my journey with trading, showcase the good, showcase the bad, showcase the ugly, showcase the amazing moments, and pretty much just track this journey. So, yeah, hopefully, who's ever watching, is able to learn from my mistakes and gain some sort of newfound knowledge, maybe some sort of help that would assist you within your trading journey. Um, One thing I do want to say before I close off this video is like this is just something that I want everybody to remember. Whoever is watching this video and make it all the way to the end, this is just something that I want to, you know, leave with you, which is it was a saying that um based off of how I felt with the trade that was taken on Tuesday, the missed opportunity that happened on Tuesday, this saying ended up coming to my head, which is the pain of regret or the pain of missing out on an opportunity is far worse than the pain of taking a loss. That's something that's very hard to understand unless you are actually, you know, within that moment and experiencing exactly what it is that I experience. Like it is far more painful and it hurts far more and it lingers with you a lot longer when you end up taking a trade or jumping at an opportunity, but you give up on yourself too early just because things kind of get tough, just because you start to see a pullback, just because, things ain't going the way that you expect it to go. You ended up coming out of that opportunity very early, very prematurely, and then within the next couple minutes, couple hours, it ends up playing out. If it's like something else in life, within the next couple days, couple months, a couple days, couple weeks, couple months, you know, literally just right there. If you had just hold on just a little bit longer, just a little bit longer, you would have been able to capitalize on that opportunity. but because of your mindset, you ended up exiting out, removing yourself from the opportunity too early. And now you have to live with the fact that you missed that opportunity and you have to wait until the next one comes around, which you don't know when an opportunity like that is going to come around again. So, you know, whereas if you just ended up staying in, sticking with that opportunity, staying in that trade, and you held it out and it hits your stop loss, fine. You only lose a couple dollars, you know, you only get a little bit of boost up, but eventually you bounce back. You know, you go to sleep, you watch a little video, you do something to ease your mind, and then you come back at it. The next time you learn from what it is you did wrong, and you try again the next time. So, like, you have to weigh it out for yourself. Which would you rather? Would you rather miss out on an opportunity that could have elevate you, carry you, progress you further in life, a lot more than you expected? Could have allowed you to pass that funded challenge, could have allowed you to make that profit goal that you had set for yourself, you know, that you could have actually withdraw and utilize that money, or utilize the funds you have acquired to invest or help out your family, help out your spouse, help out your friend. Would you rather, you know, miss out on all of that because things kind of get a little bit too rough, or things didn't work out exactly how you expected it to, and you exit prematurely? Or would you rather just take a small loss, learn from it, and then try again the next time? You choose. And with that, I want to say peace out, enjoy your night, your morning, and let's have a productive week. Peace.